One of my favorite tools, actually the tool that helped me launch my company, BigTrends.com. And if you do watch CNBC, you probably saw me on there at the start of the closing bell segment here just after 3 o'clock, talking about the condition of the markets and the nature of where I think things are headed for different stocks and sectors. We're going to do that as well and have some fun with a lightning round towards the end as well. But I want to give you a quick overview of acceleration bands. Let me also get a taste of what kind of an audience we have with us, because that'll help me to tailor make the presentation when we go in to look at some live charts. What type of a trader are you? Are you a day trader, swing trader, position trader? I call it swing trader 3 to 5 days, position trader 1 to 4 weeks. Day trader speaks for itself. And you can use this in any time frame. When you talk about big trends, we're talking about finding big moves in any particular time frame that you normally look at. So we've got a combination of some day traders, swing traders, and a few that say all of the above. So glad to have you with us, but mostly swing and day trading. So we'll definitely focus on that. And I do want to remind you, of course, that everything I share with you through this presentation is for your information and education only. Nothing I talk about should be considered a specific buy or sell here. I'm usually most concerned that if you get the buy signal, that if you don't know how to properly use a sell signal, then you might be basically knowing just a little bit to be dangerous. We want to kind of give you the right introduction here and then tell you how you can expand your training with big trends to go deeper and deeper on acceleration bands and a lot of other topics. Ultimately, you know that you are solely responsible for any decisions you make as it relates to investing, and then as it relates to anything you do. It's a pretty good guide in life, right? But bottom line is that Big Trends and the staff are not responsible for any trades you choose to make. Not all Big Trends products or services are appropriate for all types of investors. And we don't provide any personalized advice. We send out email newsletters to groups, as well as a lot of education that you can then figure out how you can customize it for your own needs and your own goals. But do consult with a tax and financial advisor before you make any investment that might impact your unique financial and tax situation. So with that in mind, we're going to talk about this concept of acceleration bands. Just out of curiosity, how many of you have heard of this idea of acceleration bands that I developed back in the late 90s and beginning of the 2000s that helped me launch Big Trends? Just curious if many of you have heard of this. I know that you probably have heard of some other bands that are similar but different. Like I know almost everybody here will have heard of Bollinger Bands, right? But most of you are telling me you're not familiar with this idea of acceleration bands. And that's encouraging to me, because that means you can really add another tool to your arsenal to weed out a lot of market noise and get focused on what really matters and leave the noise to everybody else, okay? So if you're like me, probably the biggest challenge you face in today's environment is information overload. In fact, I see one of you said you've been taking notes for hours. Well done, Bob. What you need to do coming out of this session is you have to circle the one thing that's going to have the biggest impact for you right now. And for different ones of you, it's going to be different. Some of you may have learned a new indicator. Some of you may have learned a risk management technique or some other thing you really need to work on and develop. Okay, so bottom line is whichever one really resonates with you when you look at your notes after we're done here and you've heard all these great speakers, then bottom line is focus on the one thing and work on that for a while, and then you can go back to your notes and focus on the next thing. So just break it down one thing at a time. That'll really help you to weed out that overload feeling. Okay, now bottom line is that, like a lot of you, I started trading. I started in 1990, fresh out of graduating from Duke University. And perhaps maybe that fantastic education experience I had maybe made me a little overconfident. May have made me a little bit of a perfectionist, I got to admit. So my biggest challenge when I got into trading was that the more trades I made, if I got locked into a situation where I wasn't flexible, then I might hold on to a losing trade longer than I should. And we've all probably had that experience at one time or another, right? Let's face it, we're all human. We all would like to win on every trade. The reality is that you're not going to win on every trade. And even with this indicator, you're not here either. But what we're trying to do is say, give me the ones that show you the truly big moves. And if they don't work, if they fizzle, you get out quickly, you get the core of that capital back, and you move on to the next idea. You cannot get hung up with getting just locked into any concept. I know we all do a lot of great research, right? We're all great analysts, I'm sure. But the bottom line is that we've got to be flexible. So this adaptive band idea was where I said adaptive is what I really want. Now, I looked at Bollinger Bands, and I do use Bollinger Bands on certain indicators that aren't as trending. we'll actually overlay Bollingers against acceleration so you can get a flavor of how they look different than my acceleration bands. But I found that Keltner channels, moving average envelopes, a lot of the things weren't quite doing what I wanted. And then I noticed and I stumbled on this concept of acceleration bands. Some said I should have called them Headley bands and named them after myself, but I was really trying to get across the idea to my Big Trends community when I launched Big Trends 16 years ago, to say, look, what are we after as traders? We're after acceleration. But like a Bollinger or standard deviation band, we want those bands usually to encompass the vast majority of the action. And you say if they encompass 95% of the action, which is fairly typical of your classic 2 deviation band in a Bollinger, for example, guess what I would rather trade? For that particular stock in that window where it's going through the unusual phase, the unexpected phase, that other 5%, I've actually found that often those moves can happen up to 15% on average for a given stock or market, not 5%. But regardless, it's a relative minority of the time those stocks and markets will make their biggest and fastest moves. Of course, since we're not just trading one stock or one market, we can rotate into the next acceleration up or down. It hit me when I was reading a book that George Soros, the famed hedge fund manager, was interviewed in called Soros on Soros, interviewed by Barton Biggs, and basically Soros said it was the unexpected moves that were the ones where he made the most money, and that's what's called typically the, quote, fat tails of the distribution. The key word there, unexpected, okay? That's where those tails are fatter than the market anticipating. Now, speaking of, kind of like the stocks that launched big trends back at the end of the 90s, I'd had a lot of success trading tech stocks. We're going to talk about current examples, don't worry. But just, I won't get too hung up on this, but just to say, one close outside of this band, in this case it's the acceleration band that is colored in red, one close doesn't make a trend in anything that I look at. So one close is not enough. 2 closes in a row, now it's saying, okay, it finished above that upper band for a second bar, buy the next bar's open. And you could do this on different time frames. I tend to like it first looking longer term, and then moving on from there. Acceleration bands, Bob, is on a lot of the platforms now because I've approved folks like Thinkorswim, Options Express, Options House, and more to have acceleration bands on there. I use TradeStation a lot. So we'll look at a lot of these. But bottom line is that for a stock like CMGI, remember that was one of those internet fund-to-fund companies that was going to be worth more and more because they were going to launch more and more public internet companies, private turning into public, right? So it's like a venture fund, if you will, of internet companies. That really made sense while internet was going straight up, and then when it crashed in early to late 2000, CMGI went from $160 peak to nothing, okay? And so you say, gee, that sounds risky. Well, you know what? My whole goal in all of this is to only trade for the window when the window's open. When the window shuts, I have no business trying to go through that window. You could get cut. The idea is that, we want to just focus on when the window's open, you can go through it, and that's where trading is easier, historically. That doesn't mean you're not going to have a losing trades. It used to be that one close back inside of this band here got me out. And that was happening right as 99 ended. We started the new millennium. Everybody was so worried about, remember that Y2K fear? Everybody was so worried about it. And then once that was over, they said, oh, good, the world didn't end at the beginning of 2000. Now you can go buy tech stocks. You can see on this chart, not such a great opportunity to do that. In fact, you see CMGI tried to break out at the start of the new year. But notice, that was just one bar outside of that band, and then you see what happened on the second bar? One bar out, second bar back in, put an X through it, close back in. So you want to watch your closes with that indicator, and then, of course, I was done with it, and that's as I was getting big trends off the ground, teaching people about that, and they're like, give me your next tech stock. And I'm going, they're done, folks. Go work on something else. And most people have a rear-view mirror approach to investing and trading. You want to focus on what's the next big trend up or down. On the other side, on the downside, a stock like Bear Stearns always made me chuckle a little bit that this big brokerage company and investment bank called themselves a Bear Stearns rather than, say, Bull Stearns. But anyway, Bear Stearns lived up to his name and went out a big loss through 2008. You can see that here shown with demands on the bottom panel and another indicator I teach also called percent R. We're going to focus today on acceleration demands just to have you can find these accelerations. But then, yes, you can start combining it with other factors on this chart. The first one would have made you maybe a little, but not much on that acceleration two below. We'll call it a break even on that one. You see the next percent signal breakdown in the bands, and then look at what happened in early March. You saw the first and the percent R, and then look, the 1 and then 2 closes, the second close just slightly underneath that lower blue. Yeah, it shouldn't be happening. So when it does break down, it tells you, something potentially bad here. And do you think before, Bear Stearns had closed that prior Friday before they got from J.P. Morgan over the weekend for a measly $2 a share. I thought it was a typo when I read it. For $2 a share, and it opened at 3.5. Okay, down 90% from Friday's close today. Anybody might have had wind that maybe there's some problems with Bear Stearns coming into that news. I'm a guess that you do see, price action doesn't lie. Price action tells you low is going in bigger picture sense. If you try to get too cute and pick up divergences and things, you can find that you can yourself out. Find more of what I would call the true trend and leave those people trying to pixels do that on their own time. I'm really looking for where that big trend, that big move is, thus the name of the company. Of course, it did bounce a little bit because they had to raise their offer to $10 a share because it was just deemed too low. But stock went from just under 70. It was about $69 on that acceleration bands breakdown on the way to. So that's a massive haircut for that stock. Now, I've somewhat often been critiqued that maybe I'm just trading bubbles. Thing say, oh, you're just on the bubble stocks. You're just on stocks that are, having big moves. I'm like, yes, I would like that. Would you like to be on more stocks and markets that are making big moves, preferably earlier when they're just starting to get going? At least on a relative sense, there's a lot more potential life as more and more people pile on. Because let's face it, you and I as individual investors and traders don't drive the market. Whether you trade $10,000 or $10 million, we are a relatively small bunch of fish compared to the big pool of institutional money that's trading billions of dollars, right? The institutions, though, still want to make money here as well. They can't just do it in Forex or futures. They're also looking to make money in stocks. There's a lot of hedge funds out there, a lot of other institutions with equities that they're buying and selling. And guess what? You don't want to be on Bear Stearns when it drops 80% in about a week. Okay, you want to. If you're a hedge fund, you want to make money on the downside on that. And if you're an equity long only fund, you want to be out of that, right? So they all care about that. If they all want out or all want short, that's going to be a really bad downtrend, right? So the idea here is that we want to be on it, and we also want to know when to hop off of it. A big part of this is that the stocks that quote bubble up will also bubble down. They'll bust down. Okay, so that bubbles can, of course, tend to eventually bust. We've had a ton of them even since the tech bubble in '99 peaked in the early 2000. We've had, of course, the real estate boom and bust. We've had oil booming, busting again here this past year, starting to come back again. But bottom line is that you've seen gold have its big boom throughout most of the 2000s and now been in a bear trend for the last few years. It was bonds, you could say, have been a big bubble that probably is getting close to popping. Just a lot of things where you can trade them both ways here. And of course, a lot of individual stocks fit that same profile. I'm going to go into a lot of charts here or look at the current environment for the market, but I want to just give you a few of the key things that we tend to like to look at as far as what type of acceleration band plays we're looking for. Growth is really where it's at. I don't really like to use acceleration bands on cyclical industries where they're chopping back and forth. Those will fake you out. I much prefer to trade tech, biotech. Biotech, of course, has been huge in recent times. Medical, drug, healthcare, communications, and other specialty growth situations where typically when we're talking growth, we're talking about earnings growth. We're talking about how much are their profits growing. And we're usually looking for at least 25 or 30% growth, and sometimes you'll see these going up 50, 75, even doubling year over year growth scenarios at times. So you're in the fast, kind of the S curve. You've probably heard of the S curve. You think about where a company is kind of trying to get some traction, then it starts to go up, and then it kind of levels off, right? We want to be in that sort of parabolic sweet spot there where it's starting to get mass adoption. We're starting to really take off. We want to leave the more mature industries or the startups that haven't gotten any traction on the left side to everybody else. Okay, so the S, middle of that S, is where you want to be. Now, from this perspective, it doesn't hurt when there's some media debate. I mentioned earlier, I was on CNBC earlier, and I said, I'm bullish still. And they said, how can you still be bullish? You know, there's still, on the U.S. market, there's still this, for stocks, there's this general skepticism and pessimism that I think is actually a good sign when you're in an overall uptrend that we're still in. And we'll look at that in a little bit. But, you know, when everybody starts converting and goes from sort of skeptics into out and out bullish, that's where you might want to get worried. But right now we haven't really seen that level of a conversion yet. Okay, so we know the markets tend to overshoot from too big of a boom and then too big of a bust, and then usually there's a breakout to either a new high or, you know, some type of a short-term to intermediate-term high over the prior 50 bars. On a daily chart, that's about the last several months. These stocks will tend to keep going because there's no sort of overhead people that have been in a losing situation that are trying to sell on you. It's actually people that are in winning situations, and those are a lot easier to hold. Have you noticed that, by the way? When you've got a winner adding up and you've got a loser also starting to grow on you, which one takes more of your mental focus? The growing winner or the mounting loser? Just type in a W or an L in the chat box. Just curious, which one gets more of your mental attention? Yeah, everybody pretty much to the letter saying what, because guess what? It's a classic human behavior. The loser takes more of your mental energy. So guess what? This is why you don't want to hold your losers too long. You'll free up that energy to focus on your next opportunity. If you hold a loser too long, or you don't get out when you should, then basically you're just tying up and turning potential future opportunity energy into more of a dealing with the problem kind of energy. It's going to make you go from a more optimistic outlook to a more pessimistic outlook because you're having to deal with those problems more and more and more. Get rid of those trades quickly and let your winners run, and then you can really, I think, further get a lot more joy as well as profitability over time out of your trading. So don't try to buy stocks at a 52-week low. That's a terrible strategy for trading. It can work if you're a Warren Buffett with a 50-year plus time horizon. But bottom line is that, generally speaking, that's not a good trading strategy, okay? We're also but let me go into here, and then we'll come back and talk about the options, how we convert a stock idea into option. I'll tell you one that we've traded a couple times here recently, and we'll start with the daily chart. The chart of Eli Lilly, the drug company. You say, Eli Lilly, isn't that a big stock? Isn't that kind of a... But it's pretty interesting because, we picked it up here in the past week as a breakout. So what you're seeing, and you can see not every one of these is necessarily work to know how to trade it after you get a buy signal. So let's just look at that. So it's a big rally. In this case, the buy signal for Lilly happened up here. If it's two of those acceleration bands, which it was, I will wait for it to retrace back into the purple acceleration band around there. You can see my trailing stop is going to be this yellow trailing, which is a teach about why that's still a better trailing stop than acceleration band by itself. And you'll notice even only got 1 and 2 breakouts. You could have bought back into that band, and then you could have taken a quick little loss back in. So it's not a guarantee that you're going to make profits, but you can notice that what I do, came off of this recommending to buy Lilly. We actually did a spread where we bought the in-the-money call. We're going to talk about in-the-money options. And we bought calls is coming off that right after the jobs data this past Friday morning. So stocks opening about 7. We're doing the 75 strike call as a purchase. We were selling an out-of-the-money option. See, Lilly exploded today. And you can see it's not just on the daily chart that happened. Look at the hour. For you swing traders, guess what? Check out how your hourly chart can catch some of these kind of moves. So this purple line, upper and lower boundary, is my Excel. Now, I know some of you and somebody else gave out a Lilly trade yesterday. We were on Friday morning. Okay, so But yeah, bottom line is that we're looking for stocks that have the right kind of structure. You see, even if you look at the daily chart, how for so long Lilly trades in between these acceleration bands, and guess what I do when it's in between those bands? I do nothing from an acceleration band's perspective. I sit back and I wait. And so we're going to show you how I actually run scans to pick these up as they're just starting to break out. Because guess what? I don't want to get stuck on a slow boat. I want to be on the fast speed boat to quicker profit potential while also knowing I can get out quickly if it's not doing exactly what I want it to do. What's amazing is Lilly obviously had some news today. You can see, though it's not a first time, we had the same kind of a move happening back here in late May, May 28th. There was news from that oncology conference that was happening, and you had this oncology conference talking about new potential cancer treatments. And you can see sometimes it clears with conviction, and even if it trades in between there, let's look at that move a little bit closer for a second. Let's go back to that move from late May. So you see, first move happened here and you lost. Okay, so this is why you have to be systematic about when you're wrong. You don't give up on the next trade. You can see if you're trading Lilly, my stop gets triggered just underneath there, and if you bought it at 74.86, you just had a loss at 74.59. You just lost about 27 cents. Okay, so you're down $0.25 on the stock. Okay, and of course you can convert that into options and the leverage. Comparison, 1 and 2 closes outside right here. That breakout 75.08 on its way to 79.5. You can see, by the way, it traded underneath our trailing stop intra-bar here that started the next morning. But we watch closes. Once we're into the trade, we don't overreact to intra-bar action. Whatever time frame you trade. If you're a quick trader, 1 or 2 days, 15-minute chart's my time frame. I don't like to go down to the 5-minute or 1-minute type of charts with this because you'll get a lot more noise and a lot more whipsaws. So now you notice you did get 1 and 2 closes outside there, and you can see it didn't really kind of get going outside of those acceleration bands, but based on our trailing stop, you can see, and by the way, where was our exit on that last one? You can see, so that one was out 77.57 versus the entry 75.08 for a 2.5-point gain. In comparison, this last one here, bought at 79.80, stopped out at 79.59, you lost 21 cents. So you lost 27 and 21 cents. So you lost a total of 48 cents, and then you made $2.50. Would that be of interest to you? I would hope that that might get your attention as to the potential power of that. Now, we didn't take this potential short signal on the intraday chart because the longer-term charts I just showed you is bullish. So it pays to factor in all the time frames and say, okay, you know what, we're on an hourly buy. We're getting then a break on the hourly. If you're a swing trader, you can see the swing trade buy happen here at 75.3. It ran up to 79. I'm also recommending, if you trade options, just out of curiosity, do you trade options yet? Just type a Y or an N if you trade options, just out of curiosity. So it looks like a number of you are already trading options, but some of you not. Maybe you're just still learning how to trade, or you're learning about stocks. I'll give you a real simple method to trade these. Okay, so basically I call it in the money options. Okay, so when we're buying, for example, the leg that we bought Friday morning was a 75 call. Now the stock's trading in the neighborhood of about 77.5 to 78. If you're new to options, what that means, if I say 75 call, that means you have a right to buy the stock at 75. For the sake of a round number, let's say it's at 78. Guess what? In theory, you're already $3 in the money, $3 of intrinsic value. That's $300 per 100 shares in the money. So your option contract's got to be worth at least that intrinsic component of 3, plus you'll probably pay a little bit of time on that. In fact, you can see where it closed. We were buying it right off the open, actually, but you can see where it closed Friday was 78.12. If we go and the beauty of a lot of the chart platforms now is that you can actually plot the option that you might want to trade in addition to the stock. So, of course, you can plot the stock. Guess what? I can also plot that June 75 call, and you can see we were in there buying it right off the open around $3. We were selling another out-of-the-money option against it to hedge. So we capped some of our upside here, but we've already booked our first part of our profit today. But bottom line is, say, look, I just told you it was worth $3.12 at the close, and you're paying $3.35 for it at the close on Friday. That $3.35 today went as high as $6.39, up almost double, about 90% gain here just in the next 2 sessions. You can see how it's picking up the breakout outside of those purple bands on the hourly chart as well. See those couple of moves, the first one that happened back here on Monday, if you're using the hourly chart, 386. And you can see even the 15-minute chart trader. If you're just using the option chart, you might have gotten whipped and then bought right back in. Okay, but bottom line is that we look at the stock as well. And so, and as I said, don't get stuck on these bearish potential signals if the longer-term chart's bullish. Just omit those. If you're looking at a short-term sell within a longer-term buy structure, guess what? Usually the longer-term structure will win out. Is it too late, says Ada, to get into Lilly? Yes, in my view it is for now. You would wait for it to retrace back into that acceleration band, which right now is at about 78.68 and trending up a little bit each day. So, you know, even in the next few days, it's probably going to retrace, or bands are going to probably move up closer to this old high near or just under 80. That would likely become support on the next retracement, but I certainly wouldn't chase it here. We've been harvesting profits on this late rally, okay? But the point is that even a stock like Lilly, this is not your classic tech stock. This is not your classic momentum growth name, right? But yet, even these stocks have the ability to accelerate. You can literally see visually the parabolic nature of that move just this afternoon. And I didn't even look at the news. I was busy getting back from CNBC and kind of getting settled back in. But I was saying, I know that it's hitting our first profit target, and I want to say ring the register on part of the position, and then we'll manage the rest as we go over the next several days. So the bottom line is that, you know, we are, you know, looking for those kind of moves. Now, how do I find these? This is where scans come in. Now, within TradeStation, and how do you exit? Nyla says, I'll show you more about that too. Let's just show you first how we go and find these. Within TradeStation, there's a tool called Radar Screen. And these are not recommendations, remind you. This is just kind of walking through the process, and I'll teach you more about how you can learn more about acceleration bands and go deeper on this. But let's just start with the big picture. We're starting with the daily chart. And I've got about a couple hundred key names that I look at that are plenty active in the options market as well as the stock. And basically, if we said, okay, you can see I've used a lot of different indicators, but if I said, okay, I want to go look at acceleration band breakouts, well, I've got it set up right here, the upper and the lower band. This is a classic 20-bar acceleration. So what you notice when we look at the upper ones on the daily chart, there's Lilly, of course, in second position. You can see the other ones that are over this one threshold means that they're sufficiently over that band. And you can see there's only about 5 of them. One of them was Lululemon, which we happen to have a position in based on the earnings that came out overnight. That's making us some money so far. And so Lululemon, LinkedIn starting to come back. Humana, which of course announced they want to put themselves on the block potentially for sale, so they're shopping around for potential offers. And the biggest one on my list is Sina.com, one of the big China names. Okay? And then if we flip it over on potential breakdown candidates, this is, remember, on the daily chart. These are the ones below 1 in this case to help me differentiate them. On the bear side, it would be names like Michael Kors, BHP Billiton, Newmont, a lot of the mining and metal interests there. There's silver, Alcoa, a lot of those metal plays. You can see there's also some of the airlines like Southwest. There's Walmart. So again, anything under a 1 is actually about 26 of those that fit that potential profile, where we have a position in Chevron that's already made us some money. And you see airlines popping up. There's First Solar. There's Intel. So I'm not saying you should go out and rush to short these, but I'm saying this is a starting point for potential analysis. And so that's just on the daily chart. Now, you can also do the same thing. You say, well, if it's on the daily, wouldn't it also be on the hourly? Maybe, maybe not. So we can literally change that, and we can work our way down from the daily. Typically, the next step down is to the hourly. You see it's recalculating the data. And again, just for representative educational purposes only, if we're flipping it over and saying, okay, with how weak the market's been, there's nothing on the hour. There's 2 that are close, P&G and gold, GLD, gold ETF, but nothing confirmed there. But there's only 3 that fit from a bearish hourly, and that's Love, Southwest Air, Micron, and Newmont. Okay, so at least you're starting to whittle it down a little bit. We could do the same thing on the 15-minute, but once we have that data in hand, then like I was saying, if you're looking at Southwest, and you're saying, well, you see Southwest broke down on the daily. It even retraced right back into our yellow trailing stop. Several days it tried to trade above there, but never closed above there, and then slammed down again the last couple sessions. Now you can see the hourly is still hanging in there as well, even with the late retest, the 15 minutes back into a little bit of a chop zone. So, and that's fairly rare for Southwest. Of course, Southwest has usually been one of those stocks that has been in longer uptrends rather than downtrends. Okay, so kind of unusual, and you see something to pay attention to, but we would typically go look at its historical performance and make sure that that fits before we would consider placing a trade. Now, one of the interesting things too is that if you were looking at a potential trade on Southwest, and let's just say you're looking out into the July options for your position traders. I'm talking more about short term here. Let's look at, say you're looking out into July options, and say you're just looking at the money 35 or slightly in the money puts. I'm not recommending these, of course, just trying to get some data. And you see, we don't even have enough data, unfortunately, on the daily chart to get an acceleration band. You can see, though, obviously you'd rather pick it up, but it's just starting to break out on the hourly, just starting to break out on the 15-minute, and then the thing goes on to more than double over the last couple of sessions. Okay, so not recommending it here, might be too extended, but showing you what those intraday charts will end up looking like. Of course, the more active that option chart is, the better. So you think about a name like Apple, we're going to have plenty of activity. Apple's been stuck in the mud recently, hasn't it? And so how do you exit? We use that trailing stop there, Nyla, where we're going to use that yellow trailing line. So if you look at a stock like Apple, Apple had a couple of nice moves after its prior couple of earnings. And you see what happened this last time. It broke out right the day before earnings, and then it tried to gap up after that earnings report in late April, and boom, it flipped back underneath that upper purple acceleration band. That told us, I think we'll stay away. We're not getting the 2 bars outside of there, and it's been flat city for Apple ever since. Okay, so the idea is that, yes, there may be brief windows on your intraday charts where you might see a potential move. You see, didn't really do a whole lot for you on a potential short here this morning. Not have been advising it because you see how choppy the daily chart is. It's not like Apple has gone bad. It's not a sour apple yet. It's just saying that at this point it's consolidating. Consolidation means we stay away. We don't try to buy the low end of the band and then sell the upper band, because what will happen is if you do that, then you'll be selling the upper band the next time that it has a test and is about to go ballistic, and it'll get you in the wrong frame of mind. So that's the kind of thing that we look for really, really carefully. Okay, what about the overall condition of the broader market? One of the interesting things you can do, you can take a step or two back actually, and you can go look at the Dow on a long-term chart. You can see the breakout that we have, for example, in 06-07 was an acceleration to the upside. Didn't last too long. Got you out at the start of 08, and then we had the brief breakdown at the fall of 08 collapse, and then sort of snap back up in early 09. You see, since we've actually technically got a buy signal going back to end of May, start of June 2013 at Dow 15,123, and look at how many tests it's had of this support line during the month, but has not closed below it. Right now, that support line for the Dow is 17,588. That's a couple hundred points below where we are. That's about 1% below where we are. But I'm saying, look, in the bigger picture, I follow the trend until I get some confirmation that that trend has ended. Now, we do have in comparison the classic Bollinger Band. This is the 20-bar Bollinger with 2 deviations in the light blue line, just to show you the difference. So that, you know, if you were going in, and let's actually show it to you a little more dramatically with a stock like Apple on a long-term chart. You see that when Apple started to break out here on the acceleration bands back in 2010, on this chart it would have been at $37. And you see the Bollinger races to catch up. The Bollinger doesn't like for something to be outside of it. It can be outside of it briefly, but then you see how it starts running up further to try to contain that stock. Well, it caught that first move in Apple on the acceleration band until it violated right back in here after the iPhone 5 kind of disappointing launch in late 2012. And then you see it caught the next breakout outside of there, 1 and 2 bars, gave a buy on Apple on this move at 100.59. So far, you're up, what, 25% or so. And it's not over, according to this long-term chart. So that's, again, another reason why if I see a long-term uptrend like that, there's no way you're going to find me buying puts on it, even on a short-term chart, because I don't want to fight the longer-term tidal wave, if you will. I don't want to trade the ripples and then get hammered by the bigger wave, right? So the idea here is that, okay, you can go back and you can see the number of times where it's picked up these kind of parabolic accelerations. Meanwhile, also where it kept you out of trouble, 2000, for example, coming into the start of that tech collapse, it had you hopping out right off of the end of that. Compare that to some other stocks you might remember from the day, like Qualcomm. Another one, that just caught that. It didn't have enough data actually to pick it up, but 1 and 2 closest outside of there was at $12.50, ran all the way up to $100, and then you see by the time it broke down, it was back closing at $33. Very wild volatility. A big part of this as you get into option trading is how you manage the trade based on some preset rules for your options. Let's talk about that since I'm a little bit tight on time, and then I want to pick up some questions. So my recommended option strategy to convert a stock or market-based signal into an options trade is, why buy the stock when you can buy the in-the-money option instead and get a lot of the bang for your buck without a whole lot of time risk and with a lot less capital invested. So let's say you're bearish on this stock XYZ and it's trading $56.60, and you say, okay, you know what, I think XYZ is going to $50, down a little over 10%. You say, yeah, you could short XYZ at $56.60, go borrow some shares, short it. Your broker's going to require you to tie up several $1,000s in margin money, and if it goes down there, your short shares would gain $660 or 11.7% on the stock value. And so what would happen if instead, say I look out about a month and I bought the July 60 put? Well, if you bought the July 60 put, a put is a right to sell the stock at a fixed price of 60. It's already below 60. What is the intrinsic value of this option currently as it sits with the stock at 56.60? Anybody tell me that real quick? That's right, $3.40, 3.40. You're correct. So basically, when you say, hold on, so why am I paying $470 for it if only $340 of that $470 is intrinsic value? What's that other $130 called? Some call it extrinsic value. I like to call it time value. Okay, time value means that's the privilege of buying the option going out here about another 6 weeks from now before the expiration. And guess what? For that privilege, you pay about 28% of the value of the option in time. That still is better, in my view, than buying the 55 put, which would have no intrinsic value. It would have to drop below 55 at expiration to have any value. So it's got to move a 0.60 down just to hit the strike price, as they call it, at 55. And thus, it's 100% time risk. If nothing happens or it doesn't move down fast enough, you could risk losing everything. We don't like those trades. We like trades where if it doesn't move in this case, we still have our 340 intrinsic. It would still be worth, in this case, we'd have 72% of that option value is intrinsic. That means 20% time. That'd be our risk if it doesn't move. Now, of course, if we're wrong, we still got to have a way out when we're wrong too. So that's where those clear stop outs really help also. Now, you see in this case, what's the option worth if the stock goes to 50 on a 60 strike put? You got a right to sell the stock at 60. It's now down at 50. You can pocket that differential, which of course is 10 points, or a contract controls 100 shares. 10 points times 100 shares is $1,000 that option is going to be worth at 50. Okay, so that means that before commissions, these examples are not including commissions, so do your own calculation on what your commission rate is, but they've all come down dramatically. You're making more than a double, almost a 10 to 1, about 9.5 to 1 leverage against the underlying stock. So that's, to me, still plenty of leverage, and yet it still gives us the control in case the stock is not doing what we want it to do, or if it's just flatlining, which that happens to all of us in trades. Bottom line is it's important that you just go ahead and say, okay, if that's happening, you know you need to hop off and go find your next opportunity. Okay, so that's my preferred option strategy. And I do this all the time on all kinds of vehicles. So for example, another vehicle that I like to trade is weekly options. Okay, so let's go take it down from the long-term view here for a second, and let's shrink that back down, and let's just say, okay, you know, recently I made a trade for my weekly option subscribers on Alibaba. You can see Alibaba's had some volatility both ways, but you can see this latest breakout that Alibaba was making back here on the 20th of May was taking off. We got 1 and 2 closes outside there. See how we hug that trailing stop until it's going to finally close below there, right there. So from the buy point just under 89 to the exit point here of about 93.80, you're talking about a nearly 5-point move for about 2 days of work. 5 points on an $89 stock is a more than 5% move. What's that worth in the options, do you think? Let's see if we bought the May 29th options. So let's just see, for example, if the 0605s were existing. We were buying the 86 call at the time, but we bought them a little further out. Unfortunately, you can see they don't have them back that far. We'd have to go look at even just the less leverage. Let's look at the less leveraged. I'm sorry, I typed in the wrong one there. Let's look at BABA 0605, call 86. Maybe it's in here. You can see. Yeah, it's in there. You can see that one from 520. It was going up from about $4 up to about 6.5. So it hit as high as 740. Our option managed to go up to a peak of a double, just a hair above that. So you know, from that perspective, if I get a double in a couple of days, you can assume that I'm going to book a double on a weekly option. I'm not going to try to run it to a triple and a quadruple because you know bulls and bears can get rich, but hogs tend to get slaughtered in this game. You don't want to be piggish about taking your profits. I like to book a first partial profit a lot of times around a 30% gain, and then I'll usually target up to a double on the rest. Now, if you were buying the more conservative, say, monthly options, let's look at those. This is June 19th options. You see those have gotten whacked back down here recently. But you see going back to the 20th, those were trading about $5.40, and they went to about $9. So you're going to give up some leverage as you buy more time, but there's still nothing wrong with 5 turning into 9. You know, that's still an 80% potential versus 100% on the other one. There's, you know, we're splitting hairs at that point. My goal is to get you on these moves as they develop, okay? So, bottom line is, you know, my time, I know we were targeting about 45 minutes. My time, it's amazing how fast it flies when we're talking about things that we love here, and certainly Acceleration Bands is high on my list of cherished indicators at the top of my list right there because it helped me launch bigtrends.com. So what I've done for you here is we've set up this really sweet offer, and basically I'm going to see if Chris will post it for me if he's still around. Looks like he is. And it's this special page, bigtrends.com/acceleration bands. So you just have to know how to spell acceleration, right? 2 C's in acceleration, 1 L. And so bigtrends.com says acceleration bands. Usually this would be a several $100 course, but basically in my thanks to Reed, I wanted to post it out to everybody here to say we're doing a special inspiration special price point of just $49. So you're getting lifetime access here. This isn't just like some limited access thing that we take away. It's lifetime access. All of our digital education, we've structured it so we want you to always be green and growing. We always want you to be learning from stuff that you might have missed on the first pass through. Let's face it, first in your educational process. If you just started trading, you're starting to see some things that are making your eyes pop up and go, wow, that's out there? I didn't know that existed. As you go through, you're like, yeah, I was aware of it, but maybe I wasn't aware of all of the different ways I could use that kind of an indicator. So the principle here is that I don't want to trade the chop and the noise. I want to find the bigger trends, the clearer moves, and get rid of a lot of that information overload and chatter that most other traders are basically talking up or talking down their position on those services where they're constantly posting rah-rah and to the moon messages versus you know, or why it's going to tank. That's irrelevant to me. What I care about is let the stock tell the tale. Let everybody else that wants to talk their position keep on babbling. You're better off to focus on the indicator, the technique, and then let that tell the tale about when the buyers have had enough, or when the sellers have had enough, and when you should start booking profits or how to trail your stops in a position. Okay, so this will walk you through finding the best stocks for acceleration candidates, how to use other popular indicators in conjunction with acceleration bands to really get you into, I call this volatility expansion. You know, you've probably been on trades where you saw the volatility contraction, where it just got slower and slower, and it's like, did the market just wait for you or me to get on board, and then it just started going quiet? You know, we want to go the other way. When everybody else is kind of falling asleep, that's when you've got opportunities. More about option strategies you can incorporate with acceleration bands, how to trail your stops here. We give you the specific settings. The on-demand access is available digital. We put it in a special members insider account access, so you'll get an email when you sign up. So all you do here, once you go to bigtrends.com/acceleration-band, go to that page. It says basically buy now. We've already taken the best pricing off, slashed the price down for you, just $49, no further commitment. A lot of our stuff goes as high as $2,000 or more for different programs. For $49, you get basically a lifetime access to how to use acceleration bands, 4 hours of content. If you liked what I was sharing with you here, I'm just basically just starting to open your eyes. You will be wide awake with all the opportunities that are in front of you as you go through this. So get your key information in bold. Whichever credit card you want to use. It's a secure page, of course. We don't store any credit cards here at Big Trends. And bottom line is, if you've been helped by Chris, who was in on the call with us, give him credit. If you have any questions, you can also ask any questions in the notes field. Feel free to ask questions. And then definitely review the terms and conditions. It's very clear about, basically once you buy digital education from us, we assume that you're getting the value out of it and you bought it. So, but for $49, I try to make it as low risk of a price point to say, you know what, I want you to look back and go, wow, that was a great deal. One trade that you find that you've been missing will pay for that many times over. Not making one of those losing trades that you've been making while the stock's stuck in that no man's land, that chop zone, will save you a lot more than $49 too. So I'm looking at saving you many multipliers of that $49 and helping you find a lot more opportunities to magnify that investment that you make one time here. You can see we spell it all out below. I'm a big believer in transparency as it relates to how we do business here at Big Trends on our 16th year. Dennis asks, is there a scan in the system to find the stocks? And we do have all of our Big Trends tools available as a toolkit, and then includes scans as well. So Dennis, if you're interested in that, you can go back to that main page, and you can see on the top right, that has our 800 toll-free number. And if you can't remember that number later, just remember it's 1-800-BIG-TRENDS. So if you just do 800 Big Trends on your phone, it'll get you to Chris and my team of support staff so we can help you to really take advantage of what's right for you. Oh, by the way, what's this course include? There's 6 different sessions. I was thinking I'd do about a half hour on each, but of course I tend to run long on all these, and I'm running long right here, so I'll wrap it up, Reed. Thanks for your patience. Bottom line, we give you the intro, we give you the stock and ETF strategies you can use with these acceleration bands, future strategies on tools like the E-mini, Forex strategies with Excel, find those accelerating option strategies, and then other what I call tips and tricks to use acceleration bands and things to watch out for as well. So I hope you enjoyed it. I'm out of time. I'm going to hand it back to Reed. Thanks for being with me. Go to bigtrends.com/acceleration bands. Take advantage of it while that price is low before it goes back up or goes away. And I hope you enjoyed the classes today. A lot of great speakers. Like I said, focus on what's the one thing you can do to really magnify your trading results to be more effective. Focus on that first, and then you can leverage the knowledge you've gained here. And if you have any questions, give us a call at 800 Big Trends. We'll be here to help.